Hi, I'm Toby,
And I'm Nick.
and welcome to the Pure Property Podcast from Track Capital, where we talk about all things property and property investment. The aim of the podcast is to give our industry insight and knowledge in bite-sized chunks to help investors to invest intelligently. So before we go into our subject this week, I thought we would touch base on the new rental market report that has come out from HomeTrack. So this is the quarterly rental report. So we have a house price index, which is to do with the house prices, of course, that comes out every month. And then we also have a rental market report, which comes out quarterly. So we have the Q1 figures, and it's very promising. So the UK as a whole, and this is excluding London, because London obviously being the capital big city, it does sort of take up a lot of the data. But excluding London, there has been an annual increase in rents by 3%, which is very, very good. If you then look at London Q1, it's actually down 9.4%. So hence why we take it out of the data, because it does squiff the figures a little bit. Affordability levels are still good. So in the UK, it's sitting around 31%. So that's the percentage of a salary to cover rent for a single earner. And properties on average are taking around 16 days to let in the UK. Again, very strong numbers. So just around 2 weeks. If you've got a property to let on the market, it should be rented in around 2 weeks. And the UK monthly rent average is sitting around £923. Now, we won't go into this report in too much detail. There will be a link in the show notes if you do want to look at the report yourself, but I definitely recommend looking at it because it's got some interesting numbers and data. One of the things we're seeing, I know we mentioned London sort of being down 9.4%. That said, it is starting to rebound slightly. I think prices have dropped down to a level now where demand's sort of thinking, well, we've got good prices, affordability levels, let's go back. But not only that, because the cities around the UK are now opening back up, including London, we are seeing demand increase, which is excellent. Rental demand in city centres in general is actually building and increasing again as lockdown eases and offices start to reopen, which is very, very promising because we saw a lot of reports about death of the city centres, etc., and wherever it may be. But now this is quite promising to see that we are starting to see increases in the city centre location demand for rental properties. That's very good. So again, prices doing well. You can also see that across the UK outside of London, there is obviously strong rental demand in general because there's constrained supply. So there's not enough properties out there. Hence, we're seeing the increase by 3%. So all in all, very good. One of the main striking headlines is that UK rental growth, taking out London, has hit a 4-year high, which is very, very promising, which is good. So we do foresee this to continue. It's going to be interesting to see what Q2 figures look like, and if we've had even more of an increase from there. But yeah, as I said, won't go into the detail too much. Definitely recommend looking at the data and the link that we'll provide in the show notes, because you can see a breakdown of all the major cities, and you can also see the major cities, the regions as well, and it gives a breakdown of the average rent that's being achieved in these locations, the year-on-year change. They also have the affordability levels and also the time to rent a property out in each location as well, which is always good to see. But enough of me rambling on about the rental report. This week, we're going to be talking about service accommodation and short-term lets. But yes, service accommodation, which is something which is being spoken about a lot more now. And it is something that is becoming more popular, especially in city centre locations or UK holiday locations such as Devon, Cornwall, etc. So we do get the question asked a lot, and it's quite surprising that a lot of people aren't actually familiar with it. So hence us doing the episode on it. And Nick, why don't you tell us what serviced accommodation is?
Absolutely. So Yeah, as you mentioned, it's kind of one of these key phrases that we see pop up in the property market quite frequently, both investors thinking about it and tenants potentially looking for it as well. So ultimately, the model of serviced accommodation refers to properties that are let on a short term basis. Now, these tend to be relatively new apartments which are fully furnished. They've got all the sort of utensils and everything you would need to go and stay in a property on the short term basis provided. So it really caters to those that are looking for short term accommodation. Maybe they don't want to stay in a hotel. They want the ability to cook and, have that self catering function. And by going and staying in a serviced accommodation apartment or looking for a short term rental, obviously they're able to do that with a lot more flexibility and normally at a cheaper rate than they can do in hotels. So this is typically what you'll find advertised on the likes of Airbnb and booking.com. So what we do now then is we have a look into how the actual model works, and maybe how it sort of differentiates itself from normal traditional AST agreements. So unlike standard buy-to-let rentals, with serviced accommodation, you essentially let out their property on a short-term basis. So that can be either for one night, 2 nights. You might get someone visiting for business. You might get friends going to see friends at university, etc., etc. And when you let the property out, obviously you're going to have more of a guest experience rather than a long-term tenant. So that's how you want to basically see the model as well in terms of the service you offer them. A quality communication leading up to the booking, getting the check-in and check-out all running smoothly, ensuring all the properties equipped and good to go. Obviously, you'll have a management company do this. But yeah, all in all, we want to make sure that the guests are getting a great experience. Now, in general, it's classed as a short-term let if it's less than 6 months. I mean, as I say, in most cases, you're going to be talking like a few nights or a couple of weeks, maybe. You do get a few people staying for months at a time, particularly if they're on longer working projects. But yeah, so a 6 month is typically the minimum you'll see for a assured short hold tenancy, which is a traditional tenancy agreement, what all buy to let investors typically think of in the first instance, i.e., 6 to 12 month agreement. So what happens is basically you're charging a nightly rate to your guests or your visitors. And as a result, they're charging a premium in comparison to what you would earn on a normal AST agreement. So what you'll find is over the long term of the short term let model, your income is going to be significantly higher than what you're going to get on a normal AST tenancy agreement. So that's why it's ultimately so attractive to investors, because it just increases your monthly cash flow significantly, and it can be very, very lucrative. So there are a couple of things that you want to think about before you go into a serviced accommodation model or when you're researching it. So if we go through a couple of those now, Toby, we reel off maybe one or two each and we can go from there.
Yes, so probably the main thing, if unless you own a freehold property, if you own an apartment or a city centre location apartment, etc., and you have a leasehold property, then you do have to make sure that the lease allows short-term rentals, because if not, then you aren't allowed to do it. Pretty much, your freeholder can take action against you if they do find out you're doing it, because it's technically illegal because it's against the lease. So just double check in your lease. A lot of the developments we deal with now, some of them, if they've got multiple blocks, they will keep one block aside for short-term lets. So again, when we're advertising these for sale, we do make the buyers aware that you're able to do short-term lets in them, so you have that capability. The other blocks you are unable to, because the freeholder's not allowing it in the lease. So yeah, main thing to look out for if you're a leaseholder is that you are able to do short-term lets within your lease. Nick, what about yourself?
The next one to cover off would be your mortgage. So ultimately, your lending side of things. So you basically, if you've already got a buy-to-let mortgage, obviously you want to inform your current provider that you're potentially looking to do a serviced accommodation or a short let model. Or if you're looking at mortgage products out there, obviously you need to make them aware that you are planning to operate the property on a short let basis. So it can affect interest rates slightly. However, the likely earnings or the profit difference that you're going to make should far outweigh that. But it's really important to be transparent with your lender.
Yeah, definitely. And if you own a property on a standard mortgage, don't feel like you can't just call the lender and say, "Look, am I able to do short-term lets?" Because some lenders, they may just be able to switch you to a product without too much hassle, and that some lenders even have the option to switch you back if then you change your mind later on down the road and want to carry on a normal rental basis. So if you do have a mortgage already and you're thinking of doing short-term lets, just give your lender a call, ask the question, and they'll be able to let you know how best to move forward. I'm going to look at now one of the other things you need to consider, which is occupancy levels. So bear in mind, obviously, it's being rented on a night rate, so a daily basis, for example. So your occupancy levels will fluctuate. It's just something to consider because when you're forecasting or looking at your figures, it's something to bear in mind. You'd be very lucky, and we hope that you would have 100% occupancy. Doesn't always work out that way. You might have some days missing here and there. So just bear in mind when you're running your numbers that the occupancy levels will fluctuate. Some months, maybe peak season of holidays, half term, etc., you may have really strong sort of close to full capacity levels, and there might be some quieter periods where they may be sort of slightly lower. That said, on average, when you are operating, if you average it across the year, you still tend to have, as long as you're picking the right locations, good occupancy levels. Nick, over to you.
Fantastic. So the next one is the actual management of the property. So as you can imagine, unless you're willing to be exceptionally hands-on, being called at all sorts of times of the day and being in and out of the property a lot, then really you want someone to look after it and generate as much income as they can from the property. So we do recommend using a specialist short-term let management company, just because they'll be used to changing the prices frequently to cater to demand, i.e. if there's a lot happening, then they want to increase the prices. There's a much higher turnover of tenants, so they've got to be making sure their systems and processes are in place for key collection, deposits, cleaning of the property, etc., etc. So there is a lot more work involved in comparison to normal residential property management. And if you do go to a specialist short-term let management company, yes, they'll charge slightly higher fees, but they should get the most out of the property in terms of operational income, and over the long term, hopefully increase your profits.
Yeah, great point there. I mean, the management companies do charge more, but they definitely do more for their money. And sort of the time cost to you as a landlord operating that, yeah, it's definitely worth getting the management companies on board. As I said, as Nick mentioned, they will cover everything for you and take the stress out of it. Another thing to bear in mind is the costs that are involved, because when you are operating on a short let basis, it will be yourself that will be paying all the bills, for example, council tax, electricity, Wi-Fi, etc. So again, just something to factor in when operating. These will be more than covered when you're renting the property out on this basis. But again, just something to factor in, because a lot of people don't realize sometimes that with serviced accommodation, they'll be covering the bills, which can sometimes be a shock when they sort of first start up. So definitely remember that. Nick?
Excellent. So the other aspect, again, sounds like there's going to be more costs, is the furnishing aspect. So ultimately, as we know, people are booking these types of places because they want convenience. They want to be able to go straight into the property and have somewhere to sleep, or put their luggage down and head out. But ultimately, it needs to be fully equipped, so it's ultra convenient for them, as ultimately they are paying a premium to do so. So we want to ensure the apartments are fully furnished, but down to the finer details as well, more so than you would with a traditional tenancy agreement. So making sure all the bed linen's done, utensils in place, irons, towels, etc., etc. The idea is just to make it as comfortable and convenient as possible, to hopefully encourage return business as well, and to get positive reviews from the guests and the visitors. So yeah, you want to make sure it's fully kitted out and fully furnished.
Yes, and last but not least on the list of things that we recommend to consider is location. Now, you have to be picking the right location, because if you pick a property in the middle of nowhere where nobody's going to be visiting or utilizing it, then you're going to have a very bad service accommodation business. So location is key. As we've mentioned previously in this episode, city centre, beach locations, sort of like Cornwall, Devon, sort of staycations as we call it now. And staycations, by the way, are proving very popular, as you can imagine, with everything that's happened in the pandemic, people not being able to travel abroad or even want to travel travel abroad, staycations are booming at the moment. You can research it, Google it, and you'll see sort of all the figures to do with that. So location is key. If you can pick a good location, like we mentioned, city centre, etc., you're definitely on the right path to having a good service accommodation business, because there is always demand in that. We saw it before lockdown, and we are seeing it now still. Through the beginning of lockdown, it did slow down slightly, obviously, when people couldn't travel, but it's definitely picking up now. So yeah, location, as we always say, but in this instance, is definitely more important. So going on to how do you come to the conclusion that service accommodation is right for you? Because obviously it's not going to be right for every investor. I think the first thing you need to consider, maybe your risk appetite to an extent. And I just say that because with serviced accommodation, as we mentioned, you're not having a long-term tenant. So you have to have that in your mind, that there are going to be some gaps here and there between your occupancies. Some people might not be able to deal with that. Other people, if they understand serviced accommodation, how it works, are absolutely fine. It's normal. It's the nature of the beast. And overall, you will tend to be very, very lucrative from operating in this sense. So you need to have that in mind. That said, if you've got a buy-to-let property anywhere and you're using it as service accommodation, we say it's risk appetite, but if it doesn't work out, then you just rent it back out as a normal buy-to-let. Or if it's not for you, you can just switch it to a normal buy-to-let. So at least you have got a backup plan, and it gives you a degree of versatility with your investment. So this is something we're seeing being very popular with the apartments that we've been marketing recently, that have the option to do short-term lets, because people are seeing it as versatility with their investment and a way that they can boost their income. Because yes, you can have it as a normal buy-to-let and it'll be a solid investment with great capital growth potential. But if you think, well, actually, I want to earn a bit more money, you don't have to go out and buy another property to maybe get the same rental income as if you just flipped your current property into a serviced accommodation. So it can work out very well financially for you. But yes, you definitely have to make sure that you know what you're getting yourself in for. There is an element of a risk, but there is with every investment. So as long as you understand it, that is fine. Are you able to pick out good locations? This is important. As we mentioned, location is very important. If you don't, then utilize a company or somebody that does. Whether that's a company like Track Capital or somebody you know that does serviced accommodation, whatever it may be, doing your own research to an extent, you have to be able to pick out a good location. And if not, get someone who can. Do you fully understand service accommodation? So it's not something you want to jump into without fully understanding the process. So by fully understanding the process, you'll know if it's right for you as an investor. I'm sure it will be. That said, some investors may not be too keen on it. So make sure you understand it like any investment. And also, if it's your first investment, some people may say it's not too wise to take on all that on your first investment. Not necessarily so, as long as you've got the right processes and people involved, such as good managing companies, good sourcing companies, or investment companies able to source these properties for you. But some people may think, for my first investment, I want to play it extra safe and just go for a normal standard buy to let. They're the main things to consider. Nick, why don't you sort of go over, probably, we've mentioned location, but in a bit more detail, where are the best places for serviced accommodation investment?
Yeah, I think overall it's pretty simple for investors to potentially work out. Ultimately you're looking for high footfall and high demand. So if you have listened to what we've said and done a bit of research, and you've decided that you potentially do want to try and operate a model, the service accommodation model, the first places you want to look is the obvious ones. So city centre locations, Manchester, Liverpool, Birmingham, and of course London. And you just go on Airbnb and you'll see the rates that people are charging, and you can get an idea of occupancy rates by searching online as well. So if you get a city centre quality apartment in a convenient location, you're going to have a really wide range of people that are going to stay there. We touched on it before. People will be visiting for sort of social events, concerts, sporting's a big one, people going to see their favourite football teams, obviously business, both short term and slightly longer term, if you've got maybe construction projects going on, etc. And various other reasons in terms of visiting family, going to visit people at university, etc., etc. So there's a wide range of reasons why people would visit any one location. But yeah, if you're buying in a city centre, that's ultimately the place where we'd recommend. Secondly, and what Toby touched on earlier, what I think is becoming a slightly bigger market is holiday locations within the UK. So staycation destinations. So Devon, Cornwall, Blackpool, places like where you may, take a cheap break from the city and get away. I do think you may find that those types of locations are a touch more seasonal. So you might get slightly more demand in the summer whilst people want to get away. But yeah, it's certainly a good opportunity to generate some strong cash flow there. And then just the last one, which I think some people do think of last, is buying near major transport hubs, so near Gatwick Airport, near Heathrow Airport, etc., etc. If you can get somewhere that's close to the airport, and especially if you've got parking as well, that can be a massive draw for people that are, going away for their city breaks or away on business, etc. So, yes, getting somewhere near a big major transport hub would be really, really beneficial too. So, hopefully, those are a couple of points to think about on the location side of things. Just looking bigger picture on the actual serviced accommodation model, in my personal opinion, I'm a big advocate of it. I recommend to a lot of investors. Now, for me, what you've got to think about when you're buying a property is getting that short-term let approval, even if you're not going to use it. So what I say to people is make sure you've got it there, then you've got the choice to do so. But also when you're exiting your investment, the next buyer is more than likely going to be an investor. And what are they going to want to see? They're going to want to see strong returns and probably the flexibility to do short-term let. So it can actually impact your cash flow during ownership. And then also when you exit, it could potentially differentiate your property from other ones on the market. If you can show an 8% return to someone over a 6% return because you've been doing short-term lets, that's going to be much, much more favorable. Also, I do think it's going to be clamped down on a bit more. We saw this in the HMO market, licensing, a bit more on the regulation side of things. So it's really important to make sure you've got a development with that approval in the contracts that we mentioned, and that will mean you're all, set up, doing it properly, and hopefully making a lot of money in the process. So yeah, that should give everyone a good overview of the serviced accommodation model. So Toby, do you want to let us know what we'll be talking about next week?
Yeah, so next week, following a bit from this subject, we're going to be looking at what type of investment may be best for you. So we're going to go through different investment types, sort of what they entail, brief info on them, and what type of investor they may suit. Because again, you've got lots of different options out there, and we're always very, very big on strategy and laser focus. So figuring out what type of investment is best for you is a good thing to do. So that's our episode next week. Thank you for joining us this week, and we'll see you next time. Bye bye.
Thanks, everyone. Bye.